Welcome back to the Dividend Diplomats YouTube channel. You got your boys here, Lanny, Bert, the Dividend Broskies. Guys, we are going to talk to you today about a controversial stock here in the dividend investing community. This company is yielding well over 5%. In fact, they are yielding almost 5.5% after being down over 40% here in 2023. The big question is, are we buying the dip, or is this stock a value trap right now? Buckle up. Let's talk dividend investing.
Guys, smash that subscribe button. Give Bert and I a nice thumbs up. Let's get to 19,000 subscribers. In fact, if we get to 400 likes, we're going to throw out some DD swag. So you have to like, comment if you own this stock or what your favorite stock is right now, and subscribe to the channel.
Let's do it. Make sure you enter that contest. You do not want to miss out, especially once we cross that 400 like mark. So what's going on in the market? The market here in November is continuing to explode. The S&P 500 cannot seem to catch a break. And so many of the deals that we talked about last month on our channel have evaporated. I can't stress enough. We talk continuously about how you buy when the metrics are right and how you don't try to time the market. This last month has proven to be the perfect example of that theory. What do you think, Lanny?
S&P 500 up 7% the last month, up 2.5% this last week. That ended November 17th. Guys, we're filming this on the eve or the night of the 19th here, so prices will be as of the 17th. A lot of green in the market, tough finding dividend stocks, but that's when we introduced that Dividend Diplomat Stock Screener, focused on those three metrics, right, Bert? One, the PE ratio less than that S&P 500. We look at the safety of the dividend payout ratio, less than 60% in that perfect spot of 40 to 60%. Then we look at the history of growing dividends. Why? Because, guys, we're all in this to get to financial freedom, using dividend income as the best and main source of passive income. And we want that income stream to go this direction up.
That's right. In the stock we're talking about, price has been going in this direction. It's going in the other direction.
It has.
Yes, we are. We're going to be talking about Pfizer. Ticker symbol PFE. Pfizer is jumping back up onto the watch list. No, not even the watch list. The discussion list is what we'd like to call it here, because the stock price closed below a certain threshold that is very strange to see for Pfizer. As of what, the 17th is the closing prices as of the date we're recording here, Friday the 17th. Lanny, Pfizer stock price hung below $30 per share. It's at $29.92. It's incredible to see Pfizer below the 30 share mark.
You know, guys, it is wild. The mighty have fallen. Obviously a lot of the analysts are bringing it down. Sellers are pushing it down because of the I guess the after effects of the bump from the COVID vaccines that we all saw Pfizer and a few others swarm up those sales, those big dollars. And now Pfizer's coming back to reality. If you actually look at the Pfizer stock chart, guys, if you look at the 5 years, just before COVID, this is where Pfizer was trading at, in that $30 to $35 spot. They are right back there. So it's almost like, hey, let's hit the reset button. But you know what didn't hit that reset button? The dividend. The dividend is still growing. They spun off Viatris in the midst of all of this. VTRS is the other stock. So there's been a lot going on with Pfizer, Bert. A big reset here.
Yeah, you can kind of see that flowing through the earnings release, their last quarterly earnings release. Exactly what you said, Lanny. The impact of COVID is what's killing them. The fact that they're not getting all of that revenue here from COVID is what's hurting them. Despite the fact that they had $13.2 billion in revenue, it was down 40% year over year because of those COVID sales. They were lagging and even missed analyst expectation by $200 million. They actually had negative earnings. They had negative 17 cents of earnings per share in the last quarter because they took this whole thing called an impairment charge, a $5.9 billion impairment charge related to their COVID products. So yeah, it's exactly what you said, Lanny. Big red reset button was hit here for Pfizer, and they took a lot of the bloodbath here in the last quarter.
Again, guidance was also cut, so that's also why the stock has been dumped this year, especially, guys. But it is a big healthcare, big pharma. You can't knock what they have on their product listing as well as the upcoming pipeline. Still have 170 billion in market cap for this big pharma stock here, guys. This is Pfizer here.
Yeah, and in that earnings release, they talked about the optimism of the other products. There was 10% year-over-year growth for some of their other major drugs that weren't COVID related. So to your point, it's going to take time for the pipeline to flow through. It's going to take time for everything else. But Pfizer has the balance sheet, the cash, and the sales and the cash flow from those sales to pull this off and pull off a turnaround if they choose.
And guys, to leave politics out of it, who thinks that an annual COVID vaccine will stay going forward? Bert, I don't know. Do you have any thoughts? Do you think this is going to be a new vaccine that will stick around for sure?
Yeah, absolutely. I mean, it's proven variants are just going to keep coming. So they're going to keep generating the variants. How much the sales trickle through? The sales will probably never hit the COVID peak, but there's still going to be some recurring revenue that's going to keep coming from the COVID boosters. Man, I'm having a hard time talking today, everyone. I apologize.
Yeah, so that's kind of like a long-term takeaway is that, if a lot of the community and the investors and analysts, sure, yeah, it's not going to be like it was during the pandemic, but is a new revenue stream now, a recurring revenue stream here to stay? I know that there's many people that I've talked to at work, family, friends. I would say over 65% of them got the COVID vaccine this year, and most of them have said it's Pfizer.
Yep, that's right. So let's run them through the screener here. Let's take a look. That first metric's the PE ratio. The price is 29.92, as we said. We're going to have to look ahead to 2024 earnings from Seeking Alpha, which were
Yeah, of course.
18 cents. That gave you a PE ratio of 941. We don't want to omit the 2023 earnings here. They were $1.56. But that includes a lot of these one-time impairment charges, a lot of these things that drag down the earnings. So the forward ones are much more representative of the other ones going forward.
Yep. Definitely looking to 2024, especially now that we're at the end of 2023. It's a good move, in my opinion, just from setting expectations going forward here. $1.64 per share per year, or 41 cents per share per quarter, 52% payout ratio based on the 2024 expectations on earnings.
Yeah, their 5-year dividend growth rate is 4.95%. They've increased that dividend for 13 plus consecutive years. And as we all know, the big one was they didn't cut the dividend. They didn't reduce the dividend when they had the Viatra spinoff. So they kept going and they even increased it, right, Lanny? Wasn't it?
Yep.
They increased it the year of the Viatra.
I mean, I think technically, yeah, they might have done like a penny on top of them not reducing it. So yeah, I think it was just a win-win-win all across the board.
Yeah, win cubed, as they like to say. And their dividend yield, now that the price has fallen, is 5.48%. So more than triple the S&P 500, higher than most high yield savings accounts that are out there.
Little carrot there, guys. Again, this stock down 42% this year, and we'll summarize it. We'll put the chart up here. Guys, Pfizer below 30. But what are you doing right now with Pfizer stock?
I mean, look, $30 a share. No, I'm kidding. But in all seriousness,
Is it at your price point?
yeah, below 30 is usually where I look at Pfizer for my price point. So this isn't a bad one to nibble. A few shares here, a few shares there. It's
Three
easy
shares
to
for
buy.
90.
Yeah, it's easy to buy 5-share chunks of Pfizer at this price. It's very
Easy to
simple.
buy 100-share tranches and stuff.
Yeah. Yeah, get the option chain going. But you know what? It's finally at that zone where I'm like, I feel good about saying, yeah, I'm watching it. It's at the top of my watch list, maybe even beating time to buy. What are you thinking here, Lanny?
Yeah, I mean, I don't think it's a bad time to, if you have a huge position, I have over 200 shares of Pfizer. It's like, yeah, do I just add one share at this price point to lock in a yield on cost of 5.5%? It's on my watch list still. I've got a bunch of other positions I'm trying to fill, but it's high up there. I'm curious about what dividend growth might look like in the near term, as that's always a focus as well.
Yeah, so everyone, let us know what you're thinking about Pfizer. Remember, help us get this video to 400 likes so you can enter that contest to get some the swag.
Guys, that was Bert, man. He told you guys 400. If not, we're going to come and get you. We're going to give you a Stone Cold Stunner, a Triple H pedigree, and an Undertaker choke slam, guys. But what other stocks are you buying this week? What other stocks have you been buying? Let's keep saving, keep investing. Let's get to financial freedom, everybody.
Yeah, and remember, If you're not with us, you're against us, Jack.
That was Bert, the Hurt, and Lanny from the DD, over and out.